again, if you're here, I'm the only one that can see the chat, see the questions. Again, I'm running the webinar. If you have questions, you go down to the bottom, you choose my name, Melissa Armo, and you type in the chat. That is how I will see you if you want to ask me a question. Make sense? And you should also see the slide. Can everybody see the slide? Wonderful. Well, let's get started. Welcome everyone. My name is Melissa Armo. Exciting time to trade. There's so much going on. Who would have ever thought that 2025 would be so crazy, so wild, so nuts? Probably not me. I mean, when we started the year, actually the year started off very bullish. And again, new administration, so there was to be expected that we'd have some different things, some different changes. For those of you that don't know anything about me or what I do, I actually prefer to short. And it's funny because I was talking to a friend the other day. She doesn't really understand what I do. She said, oh my God, the market's been, falling with the tariffs. I said, yeah, well, I teach people how to short. And I mostly short and I do options that are puts, so it's okay that the market's falling. And again, a lot of people, if they're not into trading, they don't understand puts or shorts or any of that, but it has been a very interesting year, okay? And there's been a lot of opportunity to short, but there's also been opportunities to go long. I actually did go long the market last week. No one was more surprised than me. We ran up on a holiday week, made brand new all-time highs. I was in calls, got out of them before the holiday, but the market's been tricky. I mean, it's been very, very tricky, to be honest with you. And we're living in a culture and environment where there's so much going on. It's a 24-hour news cycle. Again, I appear on the news. I talk on TV. So I've got to be aware of things that are going on for that in case I get called to be on television. But I also have to be aware of things that are going on for my trades. Positions I could be in or things maybe that I want to do. Trades that I want to take or new trades. So if you have questions, you can plop it in the room. I will see it as we go along. Today we're going to talk about earnings season. We're going to talk a little bit about the strategy I trade. I teach a class on what I do once a month. The class for July is this weekend, July 12th and 13th. Some of you are already signed up. If you want to sign up at the end, you can email me. You must email me for the forms to sign up. You cannot sign up on the website. Earnings season is something that happens 4 times a year. We are preparing and getting ready for earnings season for this quarter in the summer because it starts next week. So typically, it's a busy time. You get stocks of companies that report their earnings and the stocks move, okay? Do we know how they're going to move before the earnings? No, we don't. But after the earnings report, I watch the stocks and then I see how they move. And then I make a determination if the stock is gapping, if I want to take a trade in it, okay? Now, again, like I said earlier, I mostly focus on shorting. That is my niche, okay? And one of the reasons that I like to do that is because I like fast trades, quick trades, and also a lot of people don't know how to short. Even people that are trading. A lot of people don't understand shorts, don't know how to short. So you really have to be on your game, if you want to do well in this market, because there's a lot of people who are just going long, and I get it. The market made new highs last week. But you can't just buy. You can't buy all the time, even in a strong market. You can't buy every dip, even in a strong stock or a strong market. And if you're doing that, even if it's working right now, once the second it doesn't start to work, you can get burned. And it's very interesting. People could take one, bad trade, and it can wipe out all the good trades they might have done for 3 months or 4 months. And that is how devastating sometimes it can be for people when they're doing something and then all of a sudden it stops working, but it really never worked, theoretically. You understand what I'm saying? And again, we'll talk about that more in a little bit here. So if you have questions, again, I appear on TV. I'm actually on Mornings with Maria this week. I was scheduled for Thursday. Now they're trying to bump me up to Wednesday, so we'll see. I'm either on Wednesday or Thursday on Mornings with Maria this week. That's a big hit for me on set on Fox. So I appear and I talk about everything under the sun. I'll find out my topics tomorrow. And if you want to watch me, if you get Fox Business, watch me. I'll send out an email to let everybody know if it's going to be Wednesday morning or Thursday morning. If you have questions, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. You can follow me on all social media too. Probably the best place to follow me is YouTube though, because again, I have a lot of videos on YouTube, trading videos, webinars, the room, reviews, and you can really kind of get an idea about what I do on YouTube. So like I said, it's a summer, officially halfway through 2025, which is crazy to me. I can't even believe it. I'm getting emails, for Halloween stuff. I can't get in the mode. I love the fall. I love Halloween. I love fall in Central Park, but I'm sort of trying to enjoy the summer. I just want to kind of enjoy the summer right now. And we've had so much rain in New York City. One of the things that I do is I do fast trades quick in the morning. That's great in the summer. If you have a pool or you want to go golfing or you're retired or you have other stuff going on with your kids, camps, things like that, activities, if your kids are off, it's nice to have the afternoons free in the summer. And again, obviously the weather is good in the summer, so we want to have our time free. Now you say, well, what about options? If I put a trade on in the morning, I put the trade on, I will check it at lunch, or I might check it before the end of the day. But I don't sit and stare at an option all day long. Now, I could be, at my desk doing work or something like that, but I generally am not sitting staring all day long at my options trade. So yes, you can trade options, and you don't have to sit at your desk for 6.5 hours. You could, even if you're worried something's going to happen, if you have a job or you have an appointment, you could put a sell order in a trade in case it does hit right away that day or something, for you to get out of it. But I wouldn't chain yourself to your desk, okay, doing any trades, day trades or options. Because again, your brain gets tired, your mind gets tired, and you need a break. Even if it's just walking away for a couple hours, come back and look at things, you get a fresh take on stuff. Sometimes you can look at something so hard. I don't know if you've ever done this, those of you that have been trading for a while, you know what I mean, where you start to see things then that aren't even there. Because you're staring at the screen, and that can drive you crazy too. So anyways, we're here, and I'm doing a July 4th package, which I'll talk about at the end of today. A package for the class this weekend, which is really great because it includes all the subscriptions and a bunch of classes where you're going to get the whole gamut if you want to join, if you want to sign up. And I'll talk about that at the end of the webinar. So anyways, like I was saying, do you know how to trade in any market? Bullish or bearish? Very, very important. Now, a couple of weeks ago, I was on TV with Charles Payne, and I said the market I thought could fall again. I really did think that was going to happen before we made new highs. We did make new highs then. We ended up making new highs, and then I looked at the charts last week when we did it, and again, I ended up going long last week. It wasn't too late to do it. The trades worked. And then we sold off today. I did not short the market today, though, I will tell you. I do think the market is going to have another sell-off. I don't know when. How will I know? I'll know it when I see it. But will we actually turn into a downtrend? I don't know. It's, again, we're in an interesting environment where we're seeing volatility. People call it a V-shaped recovery. People like to say that. They love the words. Again, if you know how to short, and we drop, you'll be able to take advantage of the opportunity. If you only know how to go long, you're going to get caught. What if we drop like we did, way back, feels like a long time ago now, March into the end of March, beginning of April? What if we drop and the next time we rally and we don't go back up to the highs? Okay? What if we drop again? Again, these are all things that people need to be able to read in live time, instead of making predictions like buying every dip and buying every support area and things like that. You must know how to go long and how to short. And again, I really have focused on shorting because I really feel that shorting gives me a huge leg up over other traders that are in the market, that are trying to take a piece of everything that's out there, because I'm looking for specific things and a specific criteria, which I teach in the class, and then I'm applying that method. Now, again, while there have been times when we have to wait sometimes for something to fall, in general, one of the other reasons I like to short is because of the fact that short moves, for the most part, not 100% of the time, but most part, they do happen pretty quick. And I like the fast trades. So let's talk about earnings season. Like I was saying earlier, there's 4 quarterly earnings seasons. During that time, companies, small ones, big ones, medium-sized corporations, most of the companies we trade you know of, you've heard of, you're familiar with them, they report their earnings for the prior quarter. Now, what's really going to be interesting is what happens here, because this will be the second quarter simultaneously while we're still in limbo with the tariffs. Remember, this is a limbo now where Trump now pushed the tariff deadline back to August 1st. So what are companies going to say? Are they not going to give guidance? We don't know. We had some of that last quarter. So I definitely think that it's going to be an interesting time to trade, where there's going to be a lot of opportunity. You always get more opportunity in earnings season than non-earnings season, but even more so now because we're going into, again, the second half of 2025, and many companies are still searching and waiting for answers who buy products when they sell their goods in the United States, and they buy things or have manufacturing overseas. So it's going to be an opportune time to trade. And again, you can do options or you could do day trades. I do both, and we're going to talk about that today too. So I plopped in here year-to-date trading room results. This does not have today's. This is through last week. Actually, the room was closed last week, so this was through the following week, the 27th. Year-to-date, 634,082. Most of my trades, I will tell you, are shorts. Now, I bumped up my risk. I was risking about 3,000 or so. I bumped it up to 4,000 just a couple weeks ago, maybe 3 weeks ago, because I was doing really good for the year. If you're someone that is having a good year, again, that's when you want to bump up your risk. And again, you want to do that right at the start of earnings season. You wouldn't want to do it over the holiday or something like that. So it's okay if you're doing well to bump up your risk. You should not be bumping up your risk every week, every day. You shouldn't be changing your risk. Your risk should be the same or close to the same on almost every trade you take equally, okay? So again, this doesn't include today. Number of trades for the year through the 27th, 149, 93 winners, 55 losers, and 1 break even. We're at a 63% win ratio year to date in the trading room. And then I have the options results in here too. This doesn't include the last week either. I risk more of my options as well. I was risking around 8,000. I bumped that up a little bit too. Because again, it's been a good start to the year. Some of these are calls, but most of these trades actually are puts that we did this year, which is interesting. Again, sometime I'll go over that in more detail, but as crazy as it sounds, the market's been bullish. It's been making new highs. I've been shorting. We've been shorting. Tesla has been one of the biggest payers for that we've been doing, which gapped down again today, which we will talk about. That was a put. Okay, so over 2.4 million in options and a 69% win ratio, again, year to date for the options newsletter. So just combined for this year, I'm really having a very good year. I'm focused this year. I'm doing everything I can to stay focused. It's been a challenging year with the tweets, with Trump and everything going on, stuff changing constantly, wars. But again, if you size yourself correctly, you look at the trade and you believe in it, you can do it. If you don't know what you're doing, you will get sucked into giving up on trades if you take them and they're down. You will also get down emotionally or mentally, besides losing in trades, if you have a bad week or a bad day or a bad trade. Everybody has a time where they're going to take a trade, or they're going to have a bad day, or they're going to have a bad week. The most important thing is to not get down about it. Because if you get down about it and you start to question yourself and get down on yourself, you're never going to be able to come back and move forward. If there's one thing that I've seen that's, just a commonality, I guess I've seen with many people that are trading, since I've been teaching people, which is for 15 years now, is that many people are upside down all over the place with their sizing. So again, it's almost like people will do one of two things when they're trading. If they're doing well and then they have a bad week, they will go off course and do crazy stuff that doesn't work, or they'll revert back to some old strategy they did or whatever, even though the trades didn't work that week, or you're on the wrong side of the market. Or people will, again, do another mistake I found is they will double down in order to chase losses if they had a trade that lost or something like that, where they will take 2, 3, 4, 5 times the amount of risk and almost, like I said, double down to try to come back, which doesn't make any sense either. So you really do have to keep your risk even on a trade. If you take 2 trades and they lose, and you're like, okay, well now I got to take 2 more trades just to come back break even, then that's what you got to do. You got to chip it back. Again, I call it chunk it out, but that's the best way to really look at it. Because before you know it, again, I've been trading a long time, so I know this is true. You will get a big trade. Again, the people who are with me know that long enough. You will get a big trade. It will plop in your lap. Something will happen. You can't force something to happen if it's not there. You cannot force a trade to go big if it's not ready to do it, or it doesn't want to do it at all. Just like you can't force something to work if it's a loser. Do you know what I'm saying? Any questions here so far? How's everyone doing? Hello. I only see 2 chats. Any questions? All right, I'm going to keep talking then. If you have a question, you can chat it. Again, getting back to what I was saying, do you want to have a career as a trader? Sometimes people dive into this full throttle and they just never look back. Sometimes people have to tippy-toe, where they're working a little bit, then they're trading 2 days a week, 3 days a week, or they're doing options and then they have to ease into the day trading. It's whatever works for you. It's not always exactly the way that you think it's going to work out. Everybody wants all the money in the world, all the time in the world to devote to doing things, projects, trades, whatever. It's like, this is just life. Do you know what I mean? Like, sometimes it's a process. But I will say that the sooner you get started, the sooner you're going to get where you want to be and reach the goal of success. And the longer it takes you to get started, the farther away your goal is. So as challenging as that is, that's what it is. It's like if you want to start a new exercise program, keep putting it off and making excuses, say, well, I'll do it after July 4th, or I'll do it after this. Or if a smoker, you want to quit smoking, or if you want to go on a diet, you're like, well, I'll put it off after the holidays. You keep putting the goal off, you're never going to get to where you want to be. So if trading is something that you want to get serious about and really, really do, then you need to start it. You need to start on the path, because the experience for people is different for every single person. It just is. Everybody comes, everyone's learning curve is different, and that's, individual for you. But the benefit is I'm here. I'm here to help you if you have questions, and I make myself available to people when they have questions via phone or email. And again, the trading room is the best place for me to answer questions for people as well. So getting into it here, again, you need the right tools to be successful, and you need the right tools to get good results. So for me, my tool is a system that I developed which rates the gap. So it's a rating system where I get up in the morning, I'm looking for stocks that are gapping, and I rate it. So I developed a whole checklist. Again, some of you have done the class. I see some familiar faces. Some of you are doing the class this weekend. Some of you are brand new and you haven't done the class. But in the class, you will learn the 26-point rating system that it took me 3 years of my life to develop. I didn't wake up one day and have 26 points. This is how I make my trade picks. It's a very useful tool. And again, we focus on shorting. If I don't find anything that I like to the downside, then I will go long. But I prefer to short for many, many reasons. And I also feel like shorting gives me a niche. I know that it does. Where there's times, again, where like we were shorting the market back at the end of March, the beginning of April, and everybody was going long and we had huge trades. That was a very significant month for me. And I feel like that period of time with the tariffs actually gave me a real leg up on my goals for 2025. So again, as much as I was shocked that the market did not sell off in the last 3 weeks and we made new highs, the tariff volatility that we had at that period was something that I took advantage of full throttle, and really has made my year so far. Again, I got 6 more months left in the year, but if we didn't have that volatility, and if we had sat on the sidelines and waited, not jumped on it, which I did, and everybody that's with me did, we would have missed it, because again, it didn't continue. It didn't continue. So again, the rating system tells me this is good. Do it. And the whole philosophy is going through 26 points and trying to find something that rates 20 points or more. If it doesn't, the rule is not to do it. And again, the other rule is to do the highest rated gap. Okay. Now here was one we did, 623. This was earnings. We're talking about earnings. This is the late earnings. Stock close here, gap down. So what is a gap? This is a daily chart. A gap is the difference between the close and the open. So every day the stock market closes at 4, and every day it opens the next day at 9:30. Simple. So again, I didn't know this was going to do it, but I saw it. And when I saw it, I said, this is going to go. So it closed up here around 64 and change, and gap down here around 48 something, and fell. I didn't even hold this all the way down. This was a nice short. We shorted it here at 46.78. Boom, got out of it 44.75, made 5,075. Again, I have bumped up my risk a little. You could have taken 100 shares. Now, I didn't do a put in this. I don't know if it had puts, but I did not do a put in it. But if you don't have a margin account, which you would have needed to do this trade, you can always buy a put. You just look it up and say, boom, Melissa's shorting this. Let me see what's the closest strike. Let me do it. And you can get in, get out. Okay. And then you make whatever you make. Okay. You would buy the put and then sell it to exit it. So let's talk more about what is a gap. A gap is the difference between the close and the open, just like I showed you in the hymns. Stocks gap most every single day. Not every gap is a good gap, or what I call a golden gap. I'm looking for the gaps that are predictable. So again, one of the misnomers or big mistakes that I find many retail traders do, and this is just across the board, and it will always be this way from now to the end of time. This is one of the reasons why my system works more often than it does not, is that a lot of people will look at something and they will do that thing thinking that they are seeing something that is the same as what they did the day before, or the day before, the week before, the month before, whatever, and it's actually not. It's actually not. So I developed a way to see something in a new way, in a new perspective, and that is one of the reasons for my success. So again, how do I do that? I use my gap rating system, and I follow the system, and I don't skip it. Here was BA. This was back in the middle of June. Stock closed here, gap down, open, rallied, dropped, closed, snug as a bug right here. It was around 203, I think, and change. Closed here, gap down, fell for planet. Again, this open here around 200 something, fell all the way down to 195. So what would you have done with this? Well, again, we traded this. You could have bought a put here. You would have had to wait for it to go. It took 24 hours. Fell. Could have done one here. Could have done a day trade here. Open, dropped, shorted it, got out. Boom, done. Again, how did I know that this would fall and continue? Because I rated it. I rated it. And again, that was back a month ago. Here was the hens. Again, what is a gap? Stock closes here, gaps down, opens, drops, boom. I haven't looked at this lately. I don't know what this did since the 23rd. My guess is this probably had a little bit more of a sell-off here, but we only did this one day. Again, that was a bearish gap. So that's what I focus on in the class. Now, what is a bullish gap? Just for so, let's look at a bullish gap. This back here at the beginning of May, closed here, gapped up, rallied. This is closes at one number, opens at a higher price than the close. So this was 4, this was 930, rallied. I didn't do this trade, but I'm just showing here. This actually was a bullish gap, and it actually went up, and you actually could have bought it. Okay. So getting back to the philosophy behind having a system and a structure to trade is that you will look at something that you're familiar with, that you can use, again, that I have been doing for 17 years, and I teach in my class once a month, where I'm saying there's no 100%. But I go into the trade, if I take the trade and risk money, and I say, this has high odds of actually working. You don't know. We're not psychics, okay? But you're like, this has really high odds of working. You almost have to think like that I'd be crazy not to do it. Because again, how do you make money? The only way you can make money is if you take risk. So you have to be willing to take risk. Unfortunately, a lot of people are taking risk for risk's sake when they trade. And you can say that they have a gambling mentality, and many people do. Many people do. They just take trades willy-nilly. And like I was saying, where people do this thing where they're double down and stuff. And that's how people can get wiped out. And they don't have any money to trade. And then they get money, they go back to trading, but they're really not following any structure. So you have to have a structure. And this isn't like my opinion structure. This is like I go through the structure. I teach in the class. What I do is actually not only doable for myself, but for anybody. It's something that I can teach you and you can learn and you can do it yourself. You don't need me. Now, I think it's very important for people when they're new to have someone to reaffirm and review the material, and then obviously be in the room every day for the support. But again, the idea that you could learn something that you could apply yourself is important, okay? Because that means it's transferable to you to use on your own, where you don't have to rely on me for the rest of your life, because you don't want to do that anyways. Because I'm not going to do this for the rest of my life either. Any questions from anybody else? Get a sip of water. Hello, how's everyone doing? Rick's there. Some of you I recognize, some of you I don't. If you have questions, you go down to 2. Choose my name, and then you can type something in. That's how you're going to ask a question. You have to type it. See where I said hi? And if it's not working, you can always email me. Anyways, getting back to what I was saying. Oh, there's Sharon. Sharon's there, okay. The Golden Gap rating system is a useful tool, okay? It is a tool that you will use daily if you want to learn it, and that's why you also have to say, okay, I'm going to risk this much money. It's going to be similar in every trade. You apply the method, you take the trade, you're up, you get out, okay? And it sounds easy, but really that's what it is. Now, one of the biggest shorts we've had in the last month is Tesla. I will say that I pulled this chart from last week, or 2 weeks ago. I can pull up the current chart here, but this was, again, had another gap today, fell today out of the sky, and we were in puts into this going into this morning. We did puts last week, and the stock gap down today, so we're already in it. Again, this has been a beautiful trade, and none of these were earnings trades. They're often related to Musk or news or whatever, but they're working, okay? So we've been playing them. So here was the 300 Teslas. We did 6.5. Let me just go back here. Again, this is a long gone trade. This expired on the 13th. But we did the 300s here. Stock closed here, gap down. So in 6.5, I did the 300 puts. Look where the stock went. This is a great example of one where you could get in and out the same day. Of course you would have done that. It fell off a planet. It fell 60 points that day. That was crazy. So that was a huge, huge short. Again, it put as a short. And it was cheap. It was cheap. $5.50. To me, that's cheap for Tesla. Again, sold at 32, 482% return on investment. So this is an advanced trader risk. If you risked 2 contracts and risked 1,100, you could have made 5,300. That's a great trade. What if you did 1 and you risked $550? Again, you could have made over 2,600 bucks. That's a good trade. And again, this was one that did go the day that I called it. Okay. I sent this out in the morning at 9:40. The stock had not fallen all the way down like that until later. So again, shorting is fun to me because you get these big moves and they happen so quickly and fast. Then we did, this was the day before. We were in the 330s the day before, 6.4, 1039. Again, Tesla's just been a big winner for us. Close here, gap down, open, dropped, fell. So we were in this here. We were in the higher strike, dropped into it, fell off a planet. Again, another good one. But funny, the one that I called the day of the 300s actually ended up being the better return on investment. Why? Because I called it very far away from the current trading price that it was at. And this was closer to the strike. So this cost more money. It was $12 for one and was 358% return investment. This was taking it on 6.4, exiting at 6.5. Again, if you did 1, you could have made $4,300. Nice trade. Nice trade. But you would have had to risk $1,200 to do it. But the first one was actually more profitable because it was farther away from the strike, and it went through it and kept going. And you will find, again, those of you, some of you are trading with me, some of you used to trade with me, you might be thinking about coming back. I see some old faces here. You know, if you've been on my options newsletter, that these trades happen. I don't know when they're going to happen, but these kinds of suckers happen all the time. You've seen it, you've done it, some of you have made the money with me. You know how it is. It's just these, you have to look at it and you have to follow through the natural inclination of the rating system. And I think, again, what happens is it's just something that I've seen over time with people that I talk to that are doing all kinds of crazy stuff and trading, whatever. They have a really hard time, following something. I don't know why. Like, to me, it makes sense to follow something rather than doing a million different things. Maybe it's people get stuff in their head where they learned, 10 different systems before they came to me. I don't know. I don't know. But again, I'm not saying that every trade that I take works. I'm not. There are some trades I take that lose. That's why I have the stats at the beginning. But the benefit of being with me is that knowing if you size yourself correctly, you take a trade that loses, you're going to get a big winner. And then the big winner is going to cover the loser. And then you're up. Then you proceed. And then you have the normal winners. The normal winners where we make 75, 80%, 100%, just a regular trade. Sharon has a question. Will I short Tesla right before the earnings? No, I will not. First of all, the options will be crazy expensive. Crazy expensive. So I don't think it's worth it to do it. And that is a gamble. That is a crapshoot. I don't know if Tesla's going to fall in earnings. You don't know. Nobody knows. And also, the earnings aren't this week or next week. I think I have to look it up. Could be the 3rd or 4th week of July. They're early on. They're in July. I don't know the date. Someone wants to look up the date. But I don't generally take trades into earnings. When I first started dabbling in options, there were 1 or 2 I did, and trust me, it only takes 1 or 2 to get burned, and you don't do it. So you may think this and think that, and he's fighting with Trump and everything else. It never ends up going in your favor, because that really is gambling, because you really don't know. And you will have plenty of time to do it. If it's really going to rally and get bought, or if it's going to sell off and drop, you'll have plenty of time to do it if after the earnings. Like, it's not like you can't trade it on the day of. That's what we're doing here. You know what I mean? It's like, so again, I'm not going to be shorting it into earnings. I'm not going to be going long into the earnings. I'm not going to be doing that. And we don't know what it's going to do. So that would be just throwing your money, on the craps table kind of thing, in my opinion. But I mean, I get that a lot of people think the earnings are not going to do well because he's lost to EV mandates, but there could be all kinds of other things where they talk about robots and all the other stuff he's doing. So don't risk the farm on that, because that's not 100%. You know what I'm saying? Anyways, why do I like to short? Again, panic selling. Panic comes into a stock, stocks fall quickly, and a lot of retail traders don't know how to short, and I'm not following retail traders, I'm following institutional money. One of the reasons that I was so shocked about the fact that the market rallied and made new highs was that it really wasn't accompanied by a lot of big money. Yes, it rallied, it made new highs, you can't deny it, the market's bullish, that's true. But it really wasn't the similar types of bullish markets and rallies that I've experienced in the past. And there was quite a few hedge funds and other people that were thinking the market would fall. I was not the only one. There were people that shorted that then ended up covering their shorts, which pushed the money up, pushed the market up too. So again, it's a very interesting time that we live in, where we have a lot of people that are trading the market. The market's open to people to trade. You could do one share of something, one contract. That's why, again, sometimes you look at something and you get faked out. You get tripped out on it. And you say, darn it, it did this thing and I thought it was going to do this thing. You have to be, I hate to say it, but you have to be pretty sure of yourself. I mean, again, there's no 100%. But you have to be as sure as you possibly can. And that's how I ended up developing so many points. I mean, 26 things is a lot of things to look at on a chart to make a decision before I do a trade. I'm doing this a long time, so I can rate a gap in 10 minutes or something. But again, if you're brand new, it may take you 20 minutes or more. I mean, I could rate a gap in 5 minutes if I had to, but I like to take my time and think about it. But you really have to be sure about the trades that you're taking nowadays. And anyways, like I was saying, how do I determine what the smart money is doing? I use my tools. It's my rating system. It's based on technical analysis and the gap. So everything I'm doing is based on charts. You got to have charts. You got to have daily charts. You got to have live data. Okay. So I find gaps and I rate them using a checklist. Gaps have to be qualified. The checklist tells you what to look for in the price of the stock. And you have to use your brain. I hate to say it, but your brain is going to help you think. So, if anything, sometimes maybe I overthink things sometimes, where sometimes it's better to take a step back. But I've found, again, in teaching people for 15 years, that a lot of people want to trade and risk their money and they don't want to think at all. They want a machine to do it, or they don't want to think. You have to think. If you have questions, ask me. But if you think something through, trust me, you're going to feel a hell of a lot better about doing it. You're going to feel a hell of a lot better about thinking it through. And I'm talking about before you take the trade. Think it through before you take it. Don't just take it like a blind bat. The whole purpose of learning the system and doing my class is that you do understand why I am calling Tesla short. And then it works. And then oh, now I see it. Because again, understanding really, really helps you. Any questions here? So anyways, I trade on the side of institutional money for the momentum moves. Big momentum can equal big money. And again, this takes the guesswork out of your trading, where you're not just trading the news. So I use this tool each morning to determine what stock to trade and when. It's a very useful tool in any market, but particularly in this type of market, which I'm saying is volatile. Yes, it's bullish, but it's volatile too. It can change in a dime. It can also help you decide if you should exit a long. Again, we're mostly shorting, but it's helpful for that. And it really takes the guesswork out of it, where you're not having to necessarily follow the constant news cycle and then get tripped up. So let's just review here. Again, what is a gap? Let's go back to that time where I was talking about. We made money. We were short. Apple closed here, gap down. What is a gap? It's a difference between the close and the open. So this was when all the tariff stuff was happening here at the beginning of April. Apple closed up here again. Obviously, this is affected by tariffs. It's closed up here over 220. Gap down here this particular morning right at like 201 and change. This was a crazy move. Again, did I know this would do that exactly? No. But we were actually short a bunch of stocks before that date on April 3rd. Those of you that are with me, we were in stuff. We were ready in stuff that I liked. Did I know they were going to drop like a brick? No. But I thought they would sell off. Okay. And so again, very often when you see something in a chart, like very often I'll take a trade, I'll see something, I'll like it, I'll do it. And then the news comes out after the fact and you're like, oh my God. And you didn't know that thing, but it was reflected in the price already. Just not as prevalent maybe as that per se. So anyways, you must become an expert, full stop. That's how you got to do it. In order to become successful in the market, you have to become an expert, a specialist in one specific strategy. I choose a strategy that reads institutional money, or what I call power money in the market. This brings momentum and opportunity. Reading this is a skill. The skill can be acquired with education. So trading education is very important. I think most people do know that. They just get frustrated sometimes when they've taken classes and not learned enough to actually make money. I started my journey. I took one class. I learned the very basics of technical analysis. I didn't learn how to make money in the market, but I knew I could. I knew it was possible. I didn't think it was impossible. Far too often traders don't understand exactly how important education is. It's okay as well to ask for help and admit you don't know or you don't understand something. We're all adults. It's okay. Like, this is new. If I'm going to somebody, like if I have a contractor and he's going to come and he's going to do work on my apartment, my air conditioner broke and I had to have the people here. I was asking questions. Did you fix it? Is this okay? Is this going to happen again? What did you do? Why did this break? I thought this was brand new. I don't know anything. I'm not a plumber, I'm not a licensed plumber. I don't know anything about it. Everyone has something that they're good at. All of you. There's nothing wrong with asking questions and saying, I don't understand this. So I'm an expert in shorting. I'm an expert in gaps. I'm not an expert in something maybe that you do. Okay? It is okay to admit that what you're doing is not working. The sooner you can come to terms with reality, if you're losing money, that you don't know what you're doing, and that you need help, the faster you can turn it around. And you can turn it around and turn it around quickly. Again, because one big trade can just make your week. It can make your month. Or even one period. Like we had that period with the tariffs. That really put me ahead for the year. I mean, I have to stay on track. But it put me so far ahead of the game for the year that like I'm in a good position this year to really surpass last couple years trading for myself profitability wise. And then I felt and decided I could bump up my risk. I still have to keep doing my thing, but you get opportunities. You got to be ready to strike, and you got to be ready to pounce on it. And we may have another opportunity like that in 2025. I don't know. Again, I'm not shorting the market here. I'm not short the market. I'm not short the Qs of the SPY. But we may have another opportunity like that, and you got to be poised and ready to do it when it happens, because it can really make a difference in your account. So anyways, how can you become successful trading? Number one, you need a winning strategy. Learn first. Okay, that's where you do the class. 2, you need a supportive mentor. Do and follow. Log into the room. I call the trades. You can do them. Okay, become an expert in one thing. Implement a winning mindset. Trade daily with conviction and confidence. And again, this winning mindset piece of it is important. It's important for me. You know, if I call a trade and I do the trade and I lose and people in the room lose, I get down too. You know what I mean? But I can pick myself right up and just go right back after it, because I've been doing this a long time, and I understand that not every trade I do is going to work. And once you can wrap your head around that, you're going to be a lot better off, because I think people get very down in themselves when they take trades and they lose. I think the biggest issue, though, for people is where they're just in a losing streak, and then they get a winner, and they just quick get out of the winner really quick, and they don't let the good trades just go. You know, like you gotta, you shouldn't be killing a good trade like with 10, 15, 20 cents. Do you know what I'm saying? I mean, again, those of you that are trading, you know exactly what I'm talking about here. Anyways, you need a winning strategy. Number one, mine is golden gap. So what is a gap? Again, we talked about this the whole night. A stock gap, so the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. So I'm determining who's in control. Who's in control? The bulls or the bears? If the bulls are in control, you're not going to make any money shorting. If the bears are in control, again, you're not going to make any money going long. So we have to figure it out. How do we do this? Again, I'm not predicting the earnings because I don't know. And even if I could predict the earnings, I wouldn't be able to predict the stock's direction. You know, Tesla could have horrible, horrible earnings and end up gapping up. That could happen. A whole slew of things could happen. So you could be right where you could say, oh my God, the report's terrible and this, but then it could react positive in the price action in the chart. So you don't know, okay? Because sometimes the fundamentals do not match up with the technicals. That's why we have to focus on the technicals, okay? Anyways, we shorted and did a bunch of shorts in Apple. I've kind of got off this for now. But we did a bunch of trades in this here. This was May. Got this beautiful move in here. And again, if you were long in there, you lost. It was not a long, okay? So again, what is a golden gap? A golden gap is a gap that rates 20 points or more per the Golden Gap 26-point rating system. You take the trade in the direction of the gap. You can do the trade as a day trade or an option. Okay, so you can do it as a day trade. You can do it as an option. I'm doing both. It's totally up to you. Whatever you want to do. So again, how do I know ahead of time where a stock will go? I rate it. I rate the gap. I use a 26-point checklist. This checklist tells me what to trade and what to look for each day, and that is exactly what you will learn in the class. And this is invaluable, and it's something I've been doing now for 17 years, which is crazy. And I've had the business for 15, so I've been teaching people for a long time. We're almost 15 years. It's crazy how time flies. Like I said, half the year is over. But once you get into it and you really stick with it and proceed, you can do well. You know, I've taught a lot of people over the years, Sometimes people come in the system, trade, and maybe they don't get it, or they make mistakes, or they size themselves, and they kind of just give up and go a different way. And then guess what? A lot of times people end up coming back to me. I talked to a guy over the weekend because I was following up with old students for July 4th, and I talked to a guy over the weekend, and I'm not going to say his name, but he was trading, he was in the room, he was doing options. He admittedly was doing crazy stuff. We've all been there, you know what I mean? Like where they're doing crazy things they shouldn't do, doubling down all kinds of stuff. And he ended up just like quitting. And then he didn't renew the room. He ended up trying all these other things, thinking there was one magic bullet that he could do. When he learned my system, and he saw it work, he knew the mistakes he was making on his own. He lost $50,000 after leaving me, doing all kinds of other stuff. And he told me that over the weekend. And I said, oh my God, you didn't. And he said he did. And he wants to come back, but he's saving his money now to come back because he has to refund his account and he has to pay for the subscription to come back. And he realizes he never should have left because he sees the trades, he knows the system. He just didn't, give it a chance. And then he saw himself making his own mistakes, but he couldn't help himself. It's just like, again, I think sometimes everyone has to go through their own process, but for sure, people have to understand that trading is not, there's no magic bullet, but this, applying the method is going to get you where you need to go if you follow it through. It doesn't mean that every trade's going to work. And if you accept that no system has 100% and there's no magic bullet, then when you find something good, like I have a good process, you will stay with it. And then someday it'll just click for you. It'll just click and open up. And the people that are with me for a long time are already there. I have people in the room with me, and some people are with me now for more than 10 years. And they've just stayed with it, and it clicks. So I've just been doing this for so long, and I've taught so many people, and I've had the business for so many years that I'm at the point now where they leave and they come back. I'd like to see people just join, stay, start slow, and really learn it. Again, I was getting back to what I was saying earlier. The educational piece of it, really understanding something is so helpful and really helps you. And it's just something that people really can't seem to want to grasp, but it is invaluable to understand. Understanding really, really, really helps you. Any questions? Okay. All right, let's talk more about Tesla. So we also did another trade. This was the same week. It was the same week that it fell back at the beginning of June, which again, that was the start of the Trump feud then. 335 puts, we did 6.2 before the sell-off. Again, this was a higher strike, and this was a really nice trade. Again, fell really big. Same expiration date, 6.5, cost $7. Sold at 16. This was the biggest trade we had that month, actually. This particular strike, the 335s. And again, if you had two, you could have made over $10,000. And if you had one, you could have made over $5,000. Again, this is doing this here. No, here. No, here. Here's the second, sorry. Close here, gap down, dropped. I remember this week. Because the trade dropped. We were up, then it reversed, then we were down in the trade. I remember people freaking out, emailing me. And I said, stay with it. Then it fell. And then it fell off the planet. That was a month ago now. Anyways, that was another good one too. Any questions? Latif, yes. Anybody else? Again, I see some familiar faces, some new faces. So again, my whole point is if you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. So we're waiting for the gap to happen. We're not predicting the gap itself. Some of these trades, it seems that I did, but we were in a good gap before it did it. Do you know what I'm saying? Just like today with the Tesla. But you have to understand how to trade with the side of power, and you need to know how to find it. Knowing how to read what institutional money looks like is essential to becoming a successful trader. And the benefit is that you can win big trading on the side of power, because that's how you're going to get stocks that fall 40, 50 points. That's how you're going to get 300% return investment trades. That's how you're going to get huge day trades as well. Okay, and again, all the stocks, everything we're trading are all companies you know, you're familiar with, you've heard of before. Okay, so number one, learn the strategy. Number two, you need to support a mentor, do and follow. Again, a mentor helps you to focus daily. I focus on gaps and shorting, and again, I'm calling the trades live in the room. So this was 2 weeks ago, whatever. Not last week because the room was closed for the holiday, but this was the 27th in here. We had a beautiful short in Tesla right in here, and it doesn't even look like much, but it ended up being a big trade for me. But again, this was almost a month from this sell-off over here, and today the stock was down in here. Again, we had last week and the holiday. So this was a big trade. So I actually did 2 trades here. Well, I had this on the stats. The first trade I got stopped and I did an ad. And then I did a second trade with an ad, and then this worked. Again, 100% conviction. So I shorted at 326.50, added at 325.50, and then got out at 318. This sold off, made $56,000. Now this is a margin trade. I get it. You could have taken less size. You could have bought a put. We've been doing puts in this, but you could have just bought a put and done this as a day trade. That was this here. Closed here, gap down, boom. So again, this may not even look like much, but look at it. You get it in right, and you get the sell-off, and you get out. And again, one of the reasons that I love Tesla, and there's other stocks I love too, but we've been talking about this, is because it does move crazy big. It does. Look at these bars. These are fats. Now that's a green one, but they're fat. You know, this wasn't even a big move for the stock actually, in a normal world. You know, which is kind of funny. An $8 move isn't even big for this, which is what this was. Because I mean, we're talking about $60 moves. So here's the 15-minute. So again, close to your gap down, rallied. Here is the day. So again, this drop down in here. Again, this is it. Boom. Again, this is the sell-off right in here. That's on the 27th. That was a 15-minute chart. And again, this is, actually it came all the way down to 317. Looks like this is all you need, you know. But again, very powerful sell-off. Gaps are the most powerful show of price action in a chart. Gaps have large moves. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. When I trade, I'm looking for and trading momentum. Then whether you have a small size or a large size, you will get a good risk to reward. So again, if you come and you decide you want to learn from me, you're going to learn this checklist. You're going to learn how to rate the gap. You're going to learn the entries. You're going to learn the exits. You're going to learn the targets. Again, the rating system helps me determine who in fact is in control. Because if you can be on the right side of that, it's gonna be easy to make money. Whether it's a $6 move, an $8 move, depending on the price point of the stock, could be less. But you're gonna get the push, or you get the rally if you're going long. But we're talking today about shorting. It's money. It's money that moves stocks, and it's big money. A big flow of money going in a certain direction is what moves the market. Stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of power. Money's very powerful. Rules the world. You want to be on the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Even if you think it's not, it is. And that's very interesting now, isn't it? Especially in these times. So you've got to focus on quality, because if you're all over the place with trades, your results are going to show that. And you want to have, you know, less trades is more kind of thing. You know what I mean? Like, do one trade, get in, get out. So back on this day where we had this huge sell-off, I did a day trade here too. It's crazy looking back where I could have held it. Stock closed here, gap down, shorted it. 322.75 was my entry. I got out at 317.30. I made almost 10 grand. I was happy with the trade. I knew it was lower, but it didn't go like this right out of the gate. But I did it. I got in and out of it. I did what I normally do. But look where it went. I had 1,800 shares of this. It's kind of funny now. It came all the way down. 273 and change was the low. And I was out of it at 317.30. But I had the puts. Look at that. Any questions here so far? Anyways, I have a trading room. That Tesla trade I called live in the room. The entry, the stop, the exit. People enter my room listening to me. I control the room. I run the room. And we're there to make money. We're very focused on what we're doing. You have to be focused. You have these quick trades. They happen very fast. You got to be on your game. That's why you have to learn it too. And I say chunk it out because you only need one good trade a day. And really, that's all you need. And then you'll have less losses too. If you're trading all day from 9:30 to 4, you're going to have more losses no matter what as well. Then number 3, become an expert in one thing. Focus on one thing. For me, it's gaps and also shorting. And I trade quick, fast trades. I focus on shorting. And again, it's about working smarter, not harder. You got to get good at one thing. If you're all over the place doing multiple different things, you're never really going to get good at whatever it is you want to do. What you have to pick, again, it could be my thing. You could say, this sounds of interest to me. I want to sign up for the class. This could be it. Again, I'm very consistent with what I do. You can go back and watch my YouTube videos online for, the last umpteen years. I'm very, very, very consistent. Okay, so gaps happen in the market on a regular basis. However, some gaps are better than others. Some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. And that's how you know when the power money will flow to pay you. And that's what you want. And then it makes it all worthwhile, and then trading's fun, and you're making thousands of dollars, but just sitting behind your desk, not even doing anything. You just press the button. You know how easy that is? The challenge becomes using your brain and your mind to dissect what's happening to be able to take it and do it. But it's something that you can grasp is what I'm saying. It's concepts that you can grasp, I should say. Why is shorting the way to go for fast profits? Again, panic. And, unfortunately, Tesla's had just tons and tons of panic in it. And the market really hasn't. I mean, the market started selling off today, and then it bounced. So be consistent with what you do. Think about it intellectually. It makes sense. If you focus on one thing and you get good at it, and then you add size. So if you want to learn my system, the system tells you how, what, and when. How do you make money in the market? Trade a strategy and system that is profitable. Golden gaps are highly profitable strategy because they focus on large momentum to trade. What stocks should you trade? Stocks that gap and rate 20 points or more per the Golden Gap 26-point rating system. You trade the gap in the direction of the gap, always doing it in the direction of the gap. When you trade them early in the morning in the open, when they set up and trigger, and you must have a structure in place to make any money at all consistently. It is about the consistency. Many people lack that in their systems. Very important. And again, I'm looking for a high probability of directional bias for the entire day. Big move in the day. Early confirmation, preferably preferably at 9:30, between 9:30 and 10, that the stock's going to fall. And then precise entries with follow-through and a good risk-reward target potential. Okay? So if you want to come and join, you've got to put a plan of action in place. Number 1, trade only golden gaps that rate 20 points or more per the 26-point system. You enter the trade. You could do entries with day trades, or you could do options. You're looking for a good risk to reward, and you have to create a money management plan that you can trade and be active. And focus on an amount of risk that you'll be able to be okay with. Again, if you're risking too much, you're not going to give the trade a chance to work and go. Any questions? So, I've been doing this, like I said, a long time. When I started, it was a rough road for me. I figured it out, but I knew I could do it. If you're in that place in your trading where you feel down, I'm telling you, you can do it. This is totally doable. You got to get in the right mindset. You got to learn the right system. You are closer to realizing your dreams than you think. And maybe it's harder than you thought, but you're going to get there. You're going to get there, and you can get there. And my job is to help you. That was from Gary. Anyways, you will learn the system. You will learn the 26 points. You will learn the rating system. You will learn why, which is very important. Why is this going to work? You will learn the checklist, the entries. You're going to learn how to short. So empower yourself today. If you're interested in the class, again, it's a complete system to learn to trade. Saturday is the 26 points. Sunday is the entries and exits. And the class is called the Golden Gap course. It's a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. And again, the class is this weekend, July 13th and 14th, 9 a.m. to 5 Eastern time, okay? And again, it's $69.99 for the class. It's online. I am doing a July 4th special, which is a huge package, which people have already signed up for, and it's a really good deal. It's committing you to doing it and really giving it your all, because you're going to get the trading room and the options subscription through the end of 2026. That's all of 2025, the rest of this year and all of next year, and all the classes. You're going to get the Golden Gap course, the Trends course, the Gap Options course, the Wealth class, which is $728, 2 one-hour mentoring sessions with me, and then all the subscriptions, the market report room, and the newsletter through the end of 2026. And this ends Friday. Obviously, the classes are this weekend, and these are the class dates. How should you have in your margin account? Do you mean, are you trying to say how much money do you need in your margin account? Is that what you meant, Michael? In order to have a margin account at a retail broker, you need a minimum of $25,000. I would have more than $25,000 so you don't get cut off, because if you fall down 1 penny to $24,999.9, they'll flag you. So I would have like $26,000 or $27,000. But if you want to do day trades, okay, you need a margin account. What's a day trade? Again, HIMS was a day trade where I'd short the shares, okay? If you're like, I don't have $25,000 or more, you can open up an options account at a retail broker with $2,000 minimum and do options. You could do 1 contract. How much you risk per trade has to do with your cash. How much you risk per trade in an option has to do with how much cash you have. How much you risk even if you have the buying power in a retail margin account. How much you risk should have to do with your cash. If you open up an account with 30 grand cash, you're going to have 120,000 in margin. That means if you take a trade, I'm just throwing these numbers out there, if you take 1,000 shares of a stock that costs $120, if that loses, are you going to lose 120,000? No, you will lose the difference between the entry and the stop. That's what you learn in the class. You will decide your risk. If you have 30 grand, I'm just making up a suggestion here, you could risk $500 a trade. So you could say, I'm going to risk $500. If the trade would lose, you'd lose $500. And if it works, $120 stock should go $1. That's not unreasonable. Maybe it'll go $1.50. So if you risk $500 and it drops $1, and you have 500 shares, I'm just making this up, if it stops $1, which it probably would be around that for that price point, you'd make $500. And that's a good trade. That's a 1-to-1 trade. And maybe you make $1.50. Maybe you make $7.50, risking 500. Again, this is if you're shorting the shares. Makes sense? But the bundle is $89.99 and includes 3 classes. This is a standard product where you get 3 classes. The deal for the July 4th package is this. You're getting an extra class, okay? So you can do another class, which is a wealth manifestation. You're getting 2 one-hour mentoring sessions with me, and you're getting all the subscriptions, not for 1 year, but through the end of next year, which is huge. There should be no rushing then. Again, I'm trying to get people to focus on the learning process so they don't make boo-boos and then have to leave and come back and leave and come back and leave and come back. Stay with the program. The best people that are doing the best with me are on the program. They're not doing all kinds of other crazy things. They stay within their guidelines of their risk. They take profits when they're up. They listen to me. Any other questions From anybody else? Jesse, I know you've been following me for a while. I don't know if you're ready for the class. Kevin, I've seen you before. Not for a while. Michael, you've been following me for a while too. I don't know if you're ready. Pete, you've been following me for a while. Philip, it's good to see you. Sharon, were you in the Teslas? Going into today? I think you were. Vernon, do you have any questions? If you do have questions, you can email me here at melissa@thestockswoosh.com. If you have questions, if you're thinking about signing up. Michael, did you have any more questions? You're welcome, Philip. How are you doing? Sharon is not in Tesla. Sharon does not have the conviction. Wow. You didn't do any of the Teslas at all. You didn't do the one coming into today from last week. Sharon doesn't like Tesla. Michael, did you have any other questions? Well, we'll see what the market does tomorrow, Sharon. Again, every sell-off lately, it goes down and poof. So again, I actually think that looked pretty good today compared to last week, considering what the market was doing. And again, I mean, I'd love to short this market. I'd love to short it. I'd love it to fall off a cliff for trading purposes. I'm not talking about the economy or something. But it's just, it doesn't want to do it right now. Do you know what I mean? Oh, you were in Tesla last week. Okay. Okay, good. Well, that's good. Listen, it was good to see some of you. Some familiar faces, and some of you follow me for a bit. It's a good special if you want to join. If you want to sign up, you have time. Today's only Monday. Deadline's Friday. If you want to sign up early, you can get in and start training with us. I will send out an email. Again, I don't know now if I'm on Mornings with Maria Bartolome, on Wednesday morning or Thursday morning. One of those days I'm going to be on, and you can watch Fox Business. Very good. Excellent. Have a great night, everyone.